Hey everyone, ready to dive into something pretty cool. Today, we're all about options trading.
Yeah, options trading. It's a whole world unto itself.
It is. We're taking this awesome book, breaking it down, so you can really get it, like what options are, how they work, and maybe even see if they have a place in your own, investing.
Exactly. And I think what's great about this book is it really demystifies options trading. It makes it approachable for, pretty much anyone.
Totally. Like right off the bat, they use this analogy about ketchup, and I'll
We
admit,
walked there.
I was like, ketchup? What's that got to do with investing? But it actually, it really clicked for me.
Yeah. The ketchup analogy is surprisingly effective.
It
It
is.
explains how options are derivatives, just like ketchup comes from tomatoes, right? Options, their value. It comes from something else, this underlying asset.
Okay, so like, say there's an option to buy Awesome Tech stock, right? And it's, let's say, $100 a share. But Awesome Tech is currently at like $120. That option, it has intrinsic value, right? Because you could buy it at that $100 and then immediately turn around and sell it for $120.
Boom, $20 profit. And
Exactly.
that's a great example of intrinsic value.
Mm-hmm.
And one thing I think is important to point out: we're not talking about those like employee stock options here.
Right.
We're talking about options that are traded on exchanges, like mini contracts. They're tied to the price of something else, like a stock or whatever.
Gotcha. So we've got stock options, then there's binary options, index options. The book makes it clear there's a whole universe of options out there.
There is,
Yeah.
and that's one of the things that makes options so interesting, right? There's a lot of variety, a lot of possibilities.
Okay, but why should someone even care about options? What's the big appeal?
Well, I'd say it comes down to flexibility. Options can be a longer-term investment, like traditional stocks, or they can be for more active trading. They let you kind of leverage what you know about, how stocks move and maybe amplify your gains or even hedge against losses.
Right. The book had this example, and of course, this is just an example, not a guarantee, but they talk about how, turning $1,500 into like over 17,000 in profit using options
Wow.
compared to like a $375 profit with the same amount in stocks. Big difference.
It is. It shows you the power of options, the leverage they can give you. And then on the other hand, if you're someone who's a bit more risk averse, you can use options for hedging. It's kind of like taking out an insurance policy on your portfolio.
You mentioned covered calls, how those can generate income, but
Yeah.
isn't there a downside? Like, what if the stock, what if it like skyrockets? Wouldn't you miss out on those profits if you used a covered call?
Yeah, that's a great question. With covered calls, you are limiting your potential upside, but you're getting that premium up front. It really comes down to your outlook for that stock and your risk tolerance.
I see. So, okay, we're starting to see how strategic options trading really is.
It is.
But before we get too deep into strategies, how about we talk about how options are actually priced?
Yeah.
This is the part that always kind of felt a little mysterious to me.
Yeah, it can seem complex at first, but really it boils down to just a few key factors. We already talked about intrinsic value. Then you've got time value. The thing is, options have an expiration date,
Right.
and as that date gets closer, that time value, it goes down. It's like a ticking clock.
It's making me think about how people, how they get so anxious about those options expiring and potentially missing out on a big market move. Like the book talks about FOMO, that fear of missing out.
Right.
Do you think that plays a big part in how people actually trade options?
I think it absolutely does. FOMO can be a powerful force in the market, especially when, everyone's talking about this one stock or this one option, and it's really tempting to just jump in, without really thinking it through, and that's when people can get into trouble.
So, how can someone avoid making those decisions based on FOMO? What does the book say?
Well, I think it comes down to, taking that step back and really looking at the situation objectively, asking yourself, is this a good opportunity based on, my strategy, my research, or am I just getting caught up in the hype?
Right. So discipline is key.
Absolutely.
Okay, so we've got intrinsic value, we've got time value. There was one more piece to that pricing puzzle, wasn't there?
There is. That's implied volatility. Yeah. Right. And implied volatility, it's basically, it reflects how much the market thinks, how much it expects the price of that, underlying asset to move around, to fluctuate. It's all about uncertainty.
Okay, so like if there's a rumor going around about a company being bought out, that would probably increase the implied volatility of its options, right?
Exactly. Mergers, earnings reports, any kind of event that injects some uncertainty, it tends to push that implied volatility up, which then affects the price of those options. It's this fascinating dance between market psychology and actual events.
So we've got a handle on, how options are priced.
Yeah.
But before we even think about placing any trades, the book really stresses having a strategy. That seems pretty important, especially for someone who's, new to all of this.
It's absolutely crucial. A good, solid strategy helps you stay focused, on what really matters.
Hmm.
Like choosing the right market based on your own insights, understanding how much risk you're comfortable with, having clear entry and exit points. It's about making informed decisions, not emotional ones.
Makes sense. So how do we go about, actually building a strategy? Where do we even begin?
Well, the first step is to choose a market that aligns with your knowledge and interests. Are you more into tech stocks or maybe commodities? Or maybe something else entirely. It's about finding your niche.
I see. So it's kind of like specializing.
Exactly.
Yeah.
Once you've got your market, then you need to, figure out your risk tolerance. Are you someone who's comfortable with big swings in price, or do you prefer something a bit more stable? There's no right or wrong answer here. It's all about what you're personally comfortable with.
So knowing yourself based. Yeah.
Exactly. And then once you get your market and your risk tolerance, sorted out, then it's time to actually start developing your entry and exit points. This is where your technical analysis comes in.
Okay, so looking at charts, identifying patterns.
Right. And this is where a good broker can really come in handy. You want a broker that offers a good platform with all the charting tools and indicators you need. And just as importantly, you want a broker with great customer service, someone you can call if you have a question or run into a problem. Especially when you're starting out, that support can be really valuable.
Yeah, that makes sense. It's like having a guide, someone to help you navigate the terrain.
Exactly. So finding the right broker is it's a key part of setting yourself up for success in options trading.
Okay, so we've chosen our market, figured out our risk tolerance, and found a good broker. What's next? How do we actually start, putting this strategy into action?
Well, the next step is to actually start identifying specific trading opportunities. This is where all that research and analysis we talked about comes into play. You're looking for stocks that fit your criteria, that have the potential to move in the direction you're anticipating.
Okay, so like if you think a stock is going to go up, you might look for a call option.
Exactly. Or if you think a stock's going to go down, you might look for a put option. It's all about aligning your trades with your overall market outlook.
Makes sense. So once you've identified a potential opportunity, then what? How do you actually, pull the trigger and make the trade?
Well, before you do that, it's important to set your order parameters. You need to decide how much you're willing to risk on the trade, and you need to set your profit target. This is where discipline comes in. It's tempting to get emotional, to let your feelings dictate your decisions, but it's crucial to stick to your plan, to execute your trades based on logic and reason, not on fear or greed.
So basically, you're saying don't let your emotions run the show.
Exactly. And it's easier said than done. We're all human. We all have emotions, but with practice, with discipline, you can learn to control those emotions and make rational decisions.
Okay, so we've identified a trade, set our parameters, and we're ready to execute. What happens next?
Well, once you've placed your order, it's important to monitor the trade to see how it's performing. You may need to adjust your position or even exit the trade altogether, depending on how the market moves. This is where staying informed comes in handy. You need to be aware of any news or events that could affect the price of the underlying asset.
So basically, you're saying stay vigilant.
Exactly. Options trading is not a set it and forget it type of investment. It requires active management.
Gotcha. So we've covered a lot of ground here, from understanding how options are priced to building a strategy and even managing our trades. What are some key takeaways for our listeners?
Well, I think the main takeaway is that Options trading can be a powerful tool for investors of all levels, but it's important to approach it with with caution, with a solid strategy, and with a willingness to learn and adapt. Makes sense. Any final thoughts before we wrap up this part of our deep dive?
Just that, don't be afraid to dive in and start learning. There's so many resources available these days. Books, websites, courses, and don't be afraid to reach out to experienced traders for advice and guidance.
Great advice. Thanks for joining us for this deep dive into options trading. We'll be back soon for part two, where we'll dive even deeper into specific strategies and real world examples.
Welcome back to our deep dive. We're getting into the nitty-gritty of options trading.
I got to admit, before we started all this, I kind of pictured options traders as like these intense people, glued to their
Yeah.
screens,
Yeah.
making split-second decisions.
Yeah, there's definitely that stereotype out there.
Yeah.
But I think this book, it does a good job of showing that options can be valuable for all sorts of investors, whether you're, actively trading or taking more of a long-term view. Right. Speaking of approaches, the book talked about different trading personalities, scalpers, swing traders, those long-term investors. Do you think most people kind of naturally, lean towards one style, or is that something you develop as you go?
Hmm. That's a good question. Probably a bit of both, right?
Mhm.
I mean, some people are naturally drawn to that fast-paced in and out kind of trading, while others are more, patient. They like to see things play out over time. But I also think it's something that can evolve as you gain experience, as you learn what works best for you.
Yeah, I guess it's like anything else. The more you do it, the more you figure out what your own style is.
Exactly.
And then there's the whole psychological side of things.
Well, yeah.
The book had a whole section on managing emotions while you're trading. What do you think about that?
Oh, it's so important. Our emotions, I mean, they can really mess with our decision making if we're not
Yeah.
careful. We talked about FOMO earlier, but there's
Yeah.
also, the danger of getting too attached to a losing trade
Right.
and just refusing to cut your losses.
It's like that, what is it? The sunk cost fallacy or something,
Yeah, yeah,
where you keep putting money into something just because you've already invested so much.
exactly. You just keep throwing good money after bad.
Yeah.
And that's why having an exit strategy, decided ahead of time is so crucial. Helps you stay disciplined and avoid letting your feelings make those decisions for you.
Right. So it's like having a plan.
Yeah, have a plan, stick to it.
Yeah.
It's all about having that roadmap so you don't get lost in the heat of the moment.
Okay, that makes sense. The book also talks about, common mistakes to avoid. Were there any that stood out to you, especially for, someone who's just getting started with options?
Yeah, one that comes to mind is not really understanding the terms and conditions of the options contract.
Oh,
It's kind of like signing a legal document without reading it.
right.
You really need to know what you're getting into.
You got to read the fine print.
Absolutely. Things like the expiration date, the strike price, the potential risks and rewards. Yeah, all that stuff. It's crucial.
Yeah, I remember when I was first learning about options, all that terminology, it was just, it was overwhelming.
Yeah. It can be a lot to take in at first. But, I think this book does a good job of breaking it down, using examples and stuff to make it more digestible.
Yeah, for sure. Another mistake they mentioned was trading options on illiquid assets. Can you explain what that means and why that's a problem?
Sure. Liquidity, it basically means how easily you can buy or sell something, right?
Hmm.
So when something's illiquid, it means there aren't a lot of buyers and sellers out there.
Okay.
So it can be hard to get in or out of a trade at a good price.
It's like trying to I don't know, like trying to sell a rare antique in a small town.
Yeah, that's a good analogy. You
Yeah.
might not find a lot of people who are interested,
Right.
and you might have to, settle for a lower price than you'd like.
Okay, so basically stick to options on things that are, traded frequently.
Exactly, like stocks with lots of shares out there,
Hmm.
where there's plenty of action.
Right. So, what about once you're in a trade? How do you manage it, effectively?
Well, the book really emphasizes the importance of monitoring your positions, keeping an eye on how things are going, and be ready to to adjust your strategy if you need to.
Right. So you're not just, setting it and forgetting it.
No, no, no. You got to stay engaged. You got to be paying attention.
Yeah.
You got to be ready to react to what the market's doing.
Okay, that makes sense. The book also mentions keeping a trading journal.
Oh, yeah, that's a great habit.
I've heard that before, but
Yeah.
I'm curious to get your take on why it's so valuable.
Well, a trading journal, it's the record of your journey, right?
Yeah.
You log your trades, why you got in, why you got out, even how you were feeling at the time,
Okay.
and it helps you spot patterns, in your decision making
Right.
and learn from those mistakes.
So it's not just about tracking the wins and losses. It's about understanding the thinking behind it all.
Exactly. It's all about becoming more aware of yourself as a trader.
Right. Right. So like more self-awareness.
Yeah, and that can lead to, to better decisions, to more discipline.
Makes sense. Okay. Let's switch gears a little bit and talk about something that can be kind of tricky, I think. Trading options based on news and rumors.
Ah, yeah, that's a dangerous game.
Yeah.
The book warns about, blindly following every headline or whisper you hear.
Yeah, it's so easy to get caught up in the hype.
Oh, absolutely. Especially with social media these days, amplifying everything.
Yeah, it's like just because something's trending doesn't mean it's a good investment.
Exactly. You gotta think for yourself.
Do your research.
Yeah. Do your own research. Be critical. Don't let don't let emotions or social pressure sway your judgment.
Easier said than done sometimes.
Oh, absolutely. It takes practice.
It does. It does. Okay. Speaking of managing things, let's talk about managing risk.
Okay, yeah. Risk management, that's crucial in options trading.
It is.
Absolutely. The book has some good strategies for that, like setting stop loss orders. That's a bit.
Stop loss orders, that's like a safety net, right?
Yeah, it's like an insurance policy. It automatically sells your position if the price drops below a certain level.
Okay, so it protects you from, losing too much.
Exactly. You're limiting your downside.
Yeah.
And just like with any type of investing, diversification is super important.
Don't put all your eggs in one basket.
Exactly. Spread those eggs around.
The book also recommends avoiding, those high-risk strategies, like naked options, especially for beginners. What are naked options, and why are they so risky?
Well, naked options, it's basically writing an option without owning the underlying asset.
Okay.
You can make a lot of money that way, but you can also, lose a lot,
Yeah.
potentially unlimited losses if the market moves against you.
Yikes.
Yeah, definitely not something for the faint of heart.
Right. Probably best to stick to the simpler strategies until you get more experience.
Exactly. Start slow, learn the ropes,
Yeah.
and then you can gradually start exploring those more complex strategies.
Okay, that makes sense. Speaking of more complex strategies, the book talked about advanced options trading. Things like spreads and straddles and strangles. What are some of the key things to know about that stuff?
Well, those advanced strategies, they basically involve combining multiple options positions
Oh, okay.
to create, custom payoffs tailored to your outlook and risk tolerance.
Okay.
So instead of just buying a call option, for example, you might buy that call and then sell another one at a different price.
Right.
And that creates what's called a bull call spread.
Right.
It limits your potential profit, but it also, limits your potential loss.
Makes sense.
And then there's the long straddle, where you buy both a call and a put option on the same underlying asset, same strike price, same expiration date.
Okay, so what's the advantage of doing that?
Well, that strategy, it profits if the price moves a lot in either direction.
Okay.
So it's like you're betting on volatility itself.
I see. So these advanced strategies, they give you more control, more flexibility.
Exactly. But they also, they require more knowledge, more experience.
Right. And probably a higher risk tolerance.
Oh, for sure. The book definitely stresses that these strategies aren't for beginners, and they recommend practicing with paper trading first.
Right. Paper trading, that's a good way to to get comfortable with how everything works before you actually put real money on the line.
Exactly. It's like a dress rehearsal.
Yeah.
You get to practice your moves without any real risk.
Okay, so we've covered a lot in this deep dive.
We have.
Any final thoughts before we wrap up this part?
Yeah, I think the big takeaway here is that options trading, it's a journey.
Right.
It's about constant learning, adapting, refining those strategies. It's about mastering your inner game just as much as it's about understanding the markets.
That's a good point. It's not just about the numbers and the charts. It's about the mental side of it too.
Exactly.
Yeah.
And remember, there are tons of resources out there to help you along the way. Online communities, books, courses, even financial advisors.
Right. So you don't have to figure it all out on your own.
No, no, not at all. There's a whole community of traders out there all learning and growing together.
Yeah, that's great. Okay, so in the final part of our deep dive, we'll take everything we've learned and look at some real world examples of these options trading strategies. We'll also talk about how to find those trading opportunities and how to manage your trading capital.
Sounds good. Looking forward to it.
All right, welcome back to the final part of our options trading deep dive. We've learned a lot, haven't we? From the basic stuff to those advanced strategies, even the psychology of it all.
Yeah, it's been quite a journey.
It has, and now it's time to put it all together, see how it works in the real world.
Right.
One thing that really stuck with me from the book was the idea that there's no one size fits all approach to options trading.
Absolutely not. It's all about finding what works for you, your own style.
Right. The book talked about those different trading personalities, remember? Scalpers, swing traders, the long-term investors.
Yeah.
Do you think people naturally, are one or the other, or is it something you kind of, develop over time?
It's probably a bit of both. Some people, they're just wired for that fast-paced action. They love those quick trades. Others, they're more patient. They like to see things unfold.
Right.
But I also think it's something that can evolve as you go. As you get more experience, you start to figure out what suits you best.
Yeah, like anything else, you gotta try things out, see what clicks.
Exactly. And once you've found your style, then it's about finding those opportunities that fit it.
Right. So once you know who you are as a trader, then you can start looking for the right trades. How does the book how does it recommend going about that?
Well, it suggests a kind of a multi-pronged approach, combining fundamental analysis, like looking at the company's financials, industry trends, all that stuff, with technical analysis, so studying those price charts and patterns.
It's like being a detective, gathering clues from all these different places.
Yeah, that's a great way to put it. And don't forget about staying on top of current events, too.
Oh, right, yeah.
Economic reports, political stuff, even natural disasters, all that can impact the market.
That's a lot to keep track of. Any tips for not getting overwhelmed, for focusing on the stuff that really matters?
I'd say start by narrowing your focus,
Right.
right? Hone in on the areas that are most relevant to your style, to the specific assets you're interested in. You don't need to be an expert on everything.
Right, right.
And don't be afraid to use those resources out there like financial news websites, analyst reports, even those online communities can be helpful.
Yeah, those can be a good source of information and insights.
Absolutely.
The book also talked about managing your trading capital. That seems like something a lot of people, especially beginners, might struggle with.
It's super important. Just like with any other part of your finances, having a budget for your trading and sticking to it, that's crucial.
Right, so you don't get carried away.
Exactly. It helps you make those decisions based on logic, not emotion,
Mm.
and it makes sure you're not risking more than you can afford to lose.
Right, right. That makes me think of another piece of advice from the book: avoiding overtrading. What's the danger there, and how can you tell if you're doing too much?
Well, over trading, it's basically when you're making too many trades too often,
Yeah.
usually driven by impulsiveness or that fear of missing out.
Hmm.
And it can lead to higher trading costs, emotional burnout, and in the end, it can actually hurt your returns.
It's like trying to time the market perfectly, constantly jumping in and out.
Exactly. You end up chasing those small gains, and you miss out on the big picture.
So the key is to be patient, wait for those really good setups.
Right. Be selective with your trades.
Okay. And what about when a trade goes the wrong way? The book talked about not chasing losses, trying to, make back your money too quickly. Why is that so dangerous?
Well, chasing losses, it's usually fueled by a mix of emotions, fear, frustration, that feeling like you need to prove yourself right.
Right. Right.
and it can easily spiral out of control.
Mm.
You end up taking on more risk and digging yourself a deeper hole.
It's like doubling down on a losing bet, at the casino.
Exactly. You're letting your emotions take over, and that's it's never a good thing in trading.
So the key is to accept the loss, learn from it, and move on.
Yeah, it's all part of the game.
Right, right. And on the flip side, the book also talked about, celebrating those wins, but not letting them go to your head.
Right, don't get cocky.
Yeah. Why is that important?
Well, success, it can be, it can be intoxicating.
It can.
And it's easy to get a little overconfident, when you're on a winning streak. But it's important to stay grounded, stay humble, and never stop learning.
Right, because that overconfidence, it can lead to bad decisions.
It can. It can make you careless. You start taking unnecessary risks.
It's like that saying, it's not about how hard you can hit, it's about how hard you can get hit and keep moving forward.
Yeah, that's a great one. Resilience. That's a key trait for any trader.
For sure. This deep dive has really shown how much of trading success, depends on things like self-awareness, discipline, and managing risk.
It's been a great exploration, hasn't it? I hope everyone listening feels like they've got a good foundation now, a solid starting point.
Me too. It's been awesome. We've covered so much ground from understanding those, the basics of how options work to looking at those advanced strategies and even diving into that whole psychology of trading.
Yeah, and remember, this is just the beginning. There's always more to learn, more to explore.
That's right. So keep learning, keep practicing, and enjoy the journey.
Exactly.
That's it for this deep dive into options trading. Thanks for joining us. We'll catch you next time on the Deep Dive.